In a blur of flashing headlines, U.S. government stakes $2 billion in quantum firms, stock tickers spike, lab lasers flicker, and engineers huddle over cryogenic chambers. The message is unmistakable: a seismic shift is underway. Why is Washington pouring billions into quantum computing? Let's break down the shockwave. The Treasury's investment arm, working with the Department of Energy, has secured preferred shares in companies like Rigetti, IonQ, and PsiQuantum, among others. The stake translates to roughly 15% ownership across the cohort, valued at today's market prices. This move mirrors historic semiconductor bets, but with a quantum twist. Quantum promises exponential speed UPS for cryptography, materials design, and optimization, capabilities that could redefine national security and economic competitiveness. By taking an equity position, the U.S. gains not just influence but a pipeline of breakthrough tech, ensuring it stays ahead in the global race. The headline number is simple: $2 billion. But that total is divided among 9 leading quantum companies. Think of it like a pizza cut into 9 slices, each slice represents the government's purchase of a share in that firm. The exact slice size varies because each company's valuation is different, but together they add up to the full $2 billion. When the government buys equity, it's not lending money, it's buying a piece of the company, similar to buying stock in any public firm. These are preferred shares, which give the Treasury priority in dividends and a say in major decisions, without taking day-to-day control. It's a partnership that aligns public goals with private innovation. Why these 9? The administration looked for firms with strong U.S. roots, distinct qubit technologies, superconducting, trapped ion, photonic, and clear paths to both commercial and defense applications. By spreading the bet across different approaches, the government hedges its risk while boosting the whole ecosystem. The deal sends a powerful signal: the U.S. believes quantum is ready for strategic investment. It lowers perceived risk for private investors, encourages follow-on funding, and gives the selected firms a stamp of credibility that can accelerate partnerships, hiring, and research breakthroughs. Imagine simulating a complex molecule in hours instead of years. Quantum computers leverage superposition and entanglement to explore vast chemical spaces, enabling researchers to design new drugs and materials with unprecedented speed. This isn't theoretical. Early prototypes have already modeled simple catalysts, hinting at a revolution in medicine and clean energy. Today's toughest optimization puzzles, routing global supply chains, balancing power grids, or optimizing investment portfolios, involve evaluating countless combinations. Quantum algorithms can evaluate many possibilities simultaneously, delivering near-optimal solutions faster than classical heuristics, cutting costs and emissions across industries. National security hinges on secure communications and advanced sensing. Quantum computers threaten current encryption, prompting a shift to quantum-resistant algorithms, while quantum sensors promise ultra-precise navigation and underground detection, capabilities that could redefine defense and intelligence operations. The timing is critical. Google's 2019 quantum supremacy demo showed a task impossible for classical supercomputers, and 2023 breakthroughs in error-corrected logical qubits proved scalability is within reach. These milestones de-risk the technology, unlocking economic growth through new markets, jobs, and innovation ecosystems. Critics warn that the government's $2 billion equity injection could distort the nascent quantum market, inflating valuations beyond what fundamentals justify. By taking preferred stakes, the state may crowd out private venture capital, creating an uneven playing field where firms with government backing appear artificially more attractive. As economist Laura Chen puts it, when the state becomes a major shareholder, price signals get muddied. Taxpayers face real risk if the selected quantum firms fail to deliver commercial returns, turning the $2 billion stake into a sunk cost. Unlike loans, equity offers no guaranteed repayment, and the government could see its investment appreciate if the technology stalls or competitors leap ahead. As watchdog group Taxfair notes, public funds should not be ventured into high-risk bets without clear accountability. The move may intensify geopolitical tensions, prompting rivals to view the stake as a form of tech nationalism that could trigger retaliatory subsidies or export controls. Such actions risk fragmenting the global quantum supply chain and accelerating a bifurcated US-China tech race, with each bloc seeking self-sufficiency. International relations scholar Mei Lu cautions, when states pick sides in critical tech, cooperation erodes and security dilemmas deepen. There is also a danger that the government's backing could unintentionally pick winners, favoring certain qubit architectures, say, superconducting over photonic, and thereby narrowing the diversity of approaches essential for breakthrough innovation. If the state's preference locks in early leaders, it may discourage risk-taking and entrench incumbents, reducing the ecosystem's long-term vitality. Innovation economist Samir Patel observes, strategic investments must preserve pluralism, or they become a barrier to the next leap. Over the next 18 months, expect a wave of prototype rollouts. IBM aims to field its 121-qubit Condor chip with error mitigation layers, Rigetti will debut its Aspen M processor targeting 80-plus qubits, and IonQ plans a new trapped ion system with improved gate fidelity. Photonic firms like PsiQuantum anticipate benchmark demonstrations of fault-tolerant modules by late 2025, setting the stage for early advantage applications. The government's equity stake is likely to trigger follow-on financing rounds. Analysts project Series C/D raises averaging $150-$250 per firm, bolstered by corporate strategic partners, e.g., aerospace, pharma, and specialty quantum VCs. This influx could push aggregate sector valuation past $30 billion by 2026, while also increasing liquidity for early employees through secondary markets. Policy reviews are on the horizon. The White House OSTP will update the National Quantum Initiative Act. NIST is slated to release draft post-quantum cryptography standards by mid-2025, and the Department of Commerce may reassess export controls on quantum hardware. These actions will shape market access, compliance costs, and the pace of international collaboration. For investors and enthusiasts, set Google alerts for earnings calls and patent filings of the 9 firms, watch demo days streamed on company YouTube channels, consider diversified exposure via quantum-focused ETFs like QTUM or deflationary funds, and keep an eye on secondary market platforms for employee stock options. Stay informed, stay curious, and let's grow together.